Thank you for joining us. The webinar will start in 2 minutes. Hello, everyone, and welcome to today's webinar, Proposed DAF Regulations, What's at Stake for Cross-Border Giving. Thanks for joining us. Before we start the webinar, there are a few housekeeping items we'd like to cover. Please make sure that your microphones are muted and your cameras are off. There will be an opportunity for questions at the end of the presentation. Please use the Q&A function at the bottom of your screen to share your questions. The session is being recorded, and we will share the recording of this webinar within the next few days. And finally, please note that the information provided in this webinar does not and is not intended to constitute legal advice. This is for general informational purposes only, and you should consult with your legal counsel before acting on this information. Today's webinar will be presented by Ted Hart, President and CEO of CAF America and CAF Canada. An internationally recognized speaker, Ted has over 30 years of experience in advising global philanthropy and is an expert in regulatory frameworks governing both domestic and global philanthropy and risk management. Ted will be joined by Jessie Krafft and Maury Ward. Jessie Krafft is CAF America's Senior Vice President of External Affairs. Jessie is responsible for developing and executing services that assist donors with strategic grant making, philanthropy planning, and investing charitable assets. Maury Ward is on the CAF America Board of Directors. Outside of her role on the board, Maury is the counsel for Ropes and Gray. She focuses her practice on advising tax-exempt organizations on a variety of matters, including tax planning, governance, unrelated business income tax issues, endowments, charitable giving, and audits. I'll now pass the floor to Ted Hart, President and CEO of CAF America.
Welcome, everyone, and joining us today for this webinar. CAF America is a U.S. public charity, and that allows individuals, foundations, corporations to make charitable donations in support of fully vetted organizations, projects across the globe. When CAF America is involved, you can count on regulatory compliance, risk management, and reputation protection. We refer to this as the 3 R's of cross-border giving. Now, my job today is to share with you a little bit about the history of donor-advised funds. So let's go back to next slide, 1924. 1924, 100 years ago, the first DAF was opened at the New York Community Trust, which was created by 11 banks who were seeking more efficiency in making grants from charitable trusts that they held. I find it fascinating that the first donor to create a fund did so with $1,000, which is worth $17,992 in today's money. And that was in honor of her son's beloved teacher at a public school, Teresa Berthold. Let's go to the next slide and we'll learn where the first grant was made. So from the Teresa Berthold's fund, the first grant in 1924 was in the amount of $20 or $360, and that went to pay for a teacher's salary at PS 9, the public school on the West 84th Street in Manhattan. Going on in the history, jumping forward to the 1990s, this is where the donor advised funds really started growing in popularity. Some commercial financial firms started offering donor advised funds as a service for their clients. And that ease of access and the professional guidance that donors were able to receive and the investment of their funds drew many, many more donors that were interested in contributions to a donor advised fund. But it was not until, next slide, 2005, until the IRS formally recognized donor advised funds. It was through the Pension Protection Act of 2006 that the term donor advised funds even came into existence. Before that, it was not defined in the IRS code or regulations. This formal recognition of donor advised funds as a distinct type of charitable giving now became part of the Internal Revenue Code. In Notice 2006-109, it provided interim guidance on donor advised fund sponsoring organizations, of which CAF America is one. Going on to the next slide here. I think actually I have a slide missing. I apologize. 2017, we had some initial guidance from the IRS that gave additional information for sponsoring organizations, but also for donors that were able to use donor advised funds to make pledge payments and other advances in advice from the IRS. But in that document in 2017, the IRS specifically stated that it was working on a fuller set of comprehensive regulations for donor advised funds. And that, in fact, brings me to the next slide, Maury Ward, for our next part of the presentation. Maury?
Thanks, Ted, and I'm glad to be with you today. So Ted mentioned that we now have our first set of proposed regulations defining terms that appear in the statutes that were enacted as part of the Pension Protection Act in 2006. We're going to start with the statutory definition of the term donor advised fund. And the objective of the statutes that were enacted in 2006 was to provide special rules for donor advised funds that are intended to guard against perceived abuses. The rules are enforced through penalty excise taxes that govern transactions with and benefits that are received by donors, donor advisors, and certain other individuals, and that address prohibited transactions from DAFs, which the statute refers to as taxable distributions. The proposed regulations that were issued in mid-November expand on the IRS notices that Ted mentioned to provide guidance on key definitional terms used in the statutes that we got as part of the Pension Protection Act. They clarify the scope of accounts treated as donor advised funds and the distributions treated as taxable distributions. And they do this by providing more nuance for the definition of donor advised fund and definitions for the terms donor, donor advisor, and taxable distribution. To be clear, the statutes that we've had since 2006 have applied for the past 17 years, and DAF sponsoring organizations have worked hard to try to figure out how these terms should be interpreted. In my view, they've generally done a good job of trying to navigate in a realm where they've had almost no guidance. The new proposed definitions are helpful in that they would provide more clarity for DAF sponsors, but they're also fairly broad. In many cases, the proposed definitions are somewhat broader than what DAF sponsors have developed as working definitions since 2006. So this breadth comes up in the context of the definition of DAF. Under the statute as enacted, a fund or account must have the three following characteristics to qualify as a DAF. First, it has to be separately identified by reference to contributions of a donor or donors. It needs to be owned and controlled by a sponsoring organization. And finally, at least one donor or donor advisor must have or reasonably expect to have advisory privileges with respect to the distribution or investment of amounts held in the fund or account. With respect to the first prong of the definition, the proposed regulations explain that it isn't necessary to keep a formal record of contributions by a donor for something to qualify as a DAF. If there isn't a formal record, the existence of a DAF is determined by considering the facts and circumstances including whether one or more donors or donor advisors regularly receive a fund or account statement from the sponsoring organization. I'll talk more about the last prong of the DAF definition, which requires that a fund have a donor or donor advisor who has advisory privileges in a moment. But first, I want to mention a few important exceptions to the definition of a donor advised fund. The first one I want to mention is multiple donor funds. So a fund or account to which multiple donors have contributed will not be a donor advised fund if no donor or donor advisor has or reasonably expects to have advisory privileges. In addition, there's an exception for single identified organizations. In other words, an account that's established to make distributions only to a single public charity is not considered a donor advised fund. A fund that wants to fall under this exception must make all distributions to the single identified organization and cannot make distributions to third parties on behalf of the identified organization. The exception doesn't apply if a donor, donor advisor, or related person has or reasonably expects to have the ability to advise regarding some or all of the distributions from identified organizations to other individuals or entities, for example, by virtue of being a director of the identified organization, or a distribution from the fund provides directly or indirectly a more than incidental benefit to a donor, donor advisor, or related person with respect to the fund. Under the proposed regulations, certain recipient entities won't qualify as single identified organizations for purposes of this exception. Those include private foundations, certain supporting organizations, foreign organizations, and non-charitable organizations. Those of you who are fans of CAF America's Friends Funds may be wondering about what it means that foreign organizations are excluded from the exception. Jessie is going to cover this issue in a few minutes, but the bottom line is that we don't think that there's anything to be concerned about. Finally, there's an important exception for disaster relief funds. Consistent with earlier guidance that was provided in Notice 2006-109, the proposed regulations establish that disaster relief funds, both those that arise in the employment context and outside of the employment context, are not considered to be donor advised funds, provided that they comply with certain code requirements that govern the provision of relief payments to employees to assist during qualified disasters. The proposed regulations declined to extend the DAF exception to emergency hardship funds outside the context of qualified disasters. Could we go to the next slide, please? Thanks. The proposed regulations provide a definition of donor that essentially means any person or entity, but the regulations exclude most public charities and governmental units from the definition. This is important because it means that if only a public charity has advisory privileges for an account, the account will not be a donor advised fund, even if there are other donors. The proposed regulations also provide a definition of donor advisor. It's a person appointed or designated by a donor to have advisory privileges regarding the distribution or investment of assets held in a DAF. It's worth noting that no particular form of appointment or designation is necessary pursuant to the regulations to make someone a donor advisor. In one of the more controversial elements of the proposed regulations, they provide that an investment advisor that provides investment advice with respect to both assets maintained in a DAF and the personal assets of a donor to that DAF is an investment as a donor advisor with respect to the DAF while serving in that dual role, regardless of whether the donor appointed the personal investment advisor. This is important because if an investment advisor is considered to be a donor advisor, the advisor can't receive any compensation from the donor advised fund. This rule would have a significant impact on a lot of DAF programs whose business models involve these types of fee arrangements. On advisory privileges, as I mentioned earlier, the third prong of the definition of donor advised fund requires that at least one donor or donor advisor have advisory privileges. The Treasury and the IRS rejected requests to define advisory privileges narrowly and instead provide several circumstances in which a donor or donor advisor will be treated as having advisory privileges. Such privileges can arise when a donor or other individual serves on an advisory committee that advises as to the distribution of amounts from a DAF. The proposed regulations provide two safe harbors under which a donor's service on an advisory committee or recommendation of an individual to serve on an advisory committee would not result in advisory privileges. Among other criteria, the donor or person recommended by the donor to serve on the committee would need to be an expert based on objective criteria in the particular field of interest or purpose supported by the fund. A donor or donor advisor will also be treated as having advisory privileges by reason of the donor's status as a donor if the sponsoring organization allows a donor or donor advisor to provide non-binding recommendations or generally solicits advice from a donor or donor advisor regarding the distribution or investment of amounts held in a fund. So the concern is that this prong could potentially capture funds that offer ongoing engagement for donors, perhaps in a somewhat informal manner, that have not historically been thought of as DAFs. That said, the preamble to the proposed regulations expressly confirms that a restriction that a donor places on a gift should not give rise to advisory privileges if the restriction is placed on a gift when it's made, and there is no provision for subsequent discretion regarding the restriction. Finally, in terms of the definition of distribution, Treasury and the IRS rejected proposals to define the term as including only gratuitous transfers. Instead, the proposed regulations define the term broadly as generally including any grant, payment, disbursement, or transfer, whether in cash or in kind, from a donor-advised fund. A taxable distribution includes any distribution from a DAF that's made to an individual or is made for a non-charitable purpose. In addition, payments to private non-operating foundations, non-charitable entities, and certain supporting organizations are treated as taxable distributions unless the sponsoring organization exercises expenditure responsibility. Distributions made to qualifying foreign organizations are not considered taxable distributions. The proposed regulations clarify that for purposes of determining whether a foreign organization is the equivalent of a U.S. public charity, donor-advised funds may rely on the same procedures private foundations use to make equivalency determinations with respect to foreign grantees. The proposed regulations also include an anti-abuse rule providing that a planned series of distributions to intermediary recipients that would be considered a taxable distribution if made directly to the final recipient will be treated as a single taxable distribution. So, for example, a grant from a donor-advised fund that's earmarked for an individual recipient, but that passes through one or more intermediary organizations that are acceptable grantees will still be treated as a taxable distribution. In terms of fees from DAFs, reasonable investment and grant-related fees will not generally be treated as distributions and therefore will not be subject to the taxable distribution rules. Interestingly, the proposed regulations provide that a distribution that is designated for lobbying will be a taxable distribution, even though a public charity grantee is permitted to engage in a limited amount of lobbying. Can we go on to the next slide, please? So let's talk for a moment about what's not in the proposed regulations. The proposed regulations do not impose a minimum payout requirement on donor-advised funds. They don't address what constitutes a distribution that may result in a more than incidental benefit from a donor-advised fund. These benefits are subject to a penalty excise tax, and there's a certain amount of confusion about what constitutes a more than incidental benefit. This issue was addressed in a limited way in Notice 2017-73, but was not revisited in the proposed regulations. The proposed regulations also don't address other controversial issues, including whether grants from private foundations to donor-advised funds should continue to count as qualifying distributions for purposes of the private foundation mandatory minimum distribution rules, or whether grants from donor-advised funds should be permitted to be used to circumvent the public support limitations that differentiate public charities from private foundations. The proposed regulations invite comments that are due to the IRS and the Treasury by January 16th. I'm aware of lots of organizations that intend to submit comments. The proposed regulations will be effective for taxable years ending after the date on which final regulations are published. So that means they're not effective right now, although they can be relied upon by organizations that would like to rely on them. As written, the proposed regs, as I said, are effective for taxable years ending after the date on which final regulations would be published. That means, and they don't include any transition rules. So that means that the regulations could theoretically become effective in the middle of a tax year with retroactive effect to the beginning of the year, which could result in unwanted consequences for DAF sponsoring organizations and for donors and donor advisors. Finally, I'm going to try and make some limited predictions here. I would say that my sense from talking with a lot of folks in the sector over the last few weeks is that the proposed regulations are reasonably controversial. I suspect that Treasury and IRS will receive a lot of comments and that the process of developing final regulations may be fairly slow. We might even see another round of proposed regulations before we ultimately get final regulations. I think Treasury and IRS know that they adopted a somewhat broad approach in the definitions and that the regulations may need to be scaled back in some respects before we have final regulations. And with that, I'll turn it over to Jessie.
Thank you so much, Maury, and hello, everyone. So good to be here today talking about this very interesting topic, and so grateful to Maury for sharing her expertise as she navigates these proposed regulations as well. So what I'll do today is just really focus in a little bit more on some of the key impacts that this could have on cross-border grant making overall. And you know, I think one keynote I want to start with at the top of this is that yes, there could be potential administrative considerations and a few changes that we need to consider as we move forward if these regulations are adopted. However, overall international grant making is not at risk. So there are some changes in the ways that we might anticipate working with some of our donor and charity partnership relationships, but overall, there are actually a lot of elements of this proposal that are supportive and help advance some of what we've already been practicing in cross-border grant making, which is really great to see. So, you know, just want to start with that sort of reassurance because we received a lot of comments and questions in the registrations to this webinar that seemed to be sort of uncertain in terms of the sort of long-term future of cross-border giving and had some concerns there, but I just wanted to start with that reassurance from the very top of this. So there are just some key takeaways that we took in when we were reading through the proposed regulations and, you know, the number of articles that have come out analyzing what this could mean, specifically around cross-border giving. So firstly, one really welcome thing that was in this proposal was that DAF grant making utilizing expenditure responsibility and equivalency determination would be codified, which really is something that we've already been doing. Of course, as if any of you on this webinar, many of you on this webinar work with us, you know that we use equivalency determination and expenditure responsibility to make grants to foreign organizations. So that is already how we've been operating, and that has been codified under this proposed regulation. So that we can continue working in that way and in the way that we do internationally. Now, there are a few specific sort of caveats to that were added under this proposal, and that could limit what is allowable under expenditure responsibility in particular. So for those that might not be fully familiar with those terms, I'll just give a very brief overview. So basically both of these regulations are expenditure responsibility and equivalency determination, or ER and ED. They are both tools that the IRS that has put forth in previous regulation that enable us to undertake a certain due diligence process and grant agreement process, grant management process, in order to make distributions to foreign organizations that are not registered public charities. Equivalency determination is essentially us making, CAF America making the determination, or others that undertake EDs, making the determination that the organization is the equivalent of a US public charity. And with that determination, it enables you to work with that organization in an unrestricted way. It doesn't require grant agreements or reporting or things like that. And so it's a great tool for, you know, perhaps larger grants to organizations that might be spent over a longer period of time. It's great for, you know, projects where there might be capital assets that are purchased or constructed, where there might be otherwise a long-term reporting requirement and things like that. So we have specific reasons we use equivalency determination. And expenditure responsibility is primarily focused on the project that the foreign organization would be supporting, and ensuring that that project is charitable and that we are collecting reports on the useful life of that particular grant. And there are grant agreement requirements and everything in place around that. So one is, you know, equivalent public charity organization, one is focused on the charitable project. That is a very simplified, high-level version, but I wanted to make sure I gave that just quick overview so that you can understand a little bit better some of the clarifications that are within these regulations about what can be done under expenditure responsibility from a donor-advised fund. So one of the things that I think is most pertinent to this is there are anti-abuse rules under this. So one of the things that means is that no grant funding may be dispersed to natural persons, which for us carries implications for scholarship programs. So as many of you may know, from a donor advised fund, we currently have a prohibition on giving to individuals. We cannot make, from a donor advised fund, we cannot make a distribution directly to an individual. However, currently we can make a distribution to, let's say, a university who is running a scholarship program. And in those circumstances, what we have to do is ensure that that scholarship program, that there is a selection process for those scholarship recipients that the donor advisor to the DAF does not have control over. And that there's a process and sort of criteria in place for the selection of those individuals for those scholarships. And we have no oversight or control over the selection of those individuals either as the donor advised fund. So that's the current state where, and still exists today, even with this proposal, because it is just a proposal at this point. But under the new regulations, we would not be able to give to a university who is then distributing to individuals in the way that we currently are. So essentially the sort of way to think about it is that there could be other implications, but that DAF grantees cannot fund anything that the DAF wouldn't have been able to fund directly. In most cases, that's generalizing a little bit, but that's sort of the way to interpret this piece of the proposed regulation. So we would really need to think about, anytime the organization is perhaps re-granting or redistributing funds, because it carries these different implications under the proposed regulations. So we might have more specific rules that we need to put in place in our grant agreements with our grantees to prohibit distributions to individuals or prohibit other things that we are not currently required to prohibit them to do. So there might just be considerations for some of those programs. Not all. We definitely fund a lot of scholarship programs right now, but it's something we would just need to adjust to over time, and are hopeful that through the comments that this could change. So we'll have to see where this goes. If you could go to the next slide, please. A few other key takeaways from this are that, Maury spoke to the single foreign organization consideration. So this is something that will be really important for us to consider moving forward. Because as Maury mentioned, there is an exception, like a an exception to being defined as a DAF if you are there's a single entity exception. However, it's specifically called out in the regulations that this does not currently, in the proposed regs, does not currently apply to foreign organizations. So, which means that if there is an account that's set up for a single entity, which would apply to our Friends Funds accounts, that account could be considered a DAF, which does have implications for us in terms of the way that we're currently managing our Friends Fund, our Friends Fund solution. So for those that may not be aware of what Friends Funds are, essentially this is currently it's a restricted fund that a foreign charity can open with CAF America. We have an agreement in place with that organization. And while CAF America still retains full control and discretion over the use of the fund, so if we decided for some reason that we cannot make the grant to that identified organization, we retain that control and discretion. But otherwise, the funds are restricted to that organization, and that the intent of that fund is to support this single foreign organization. And so this is a great alternative for charities who want to fundraise in the United States, for example, but don't want to open their own 501c3. So this is sort of an alternative to opening a Friends of organization or their own separately registered 501c3 in the United States. So the current construct of that could be in jeopardy with these regulations. However, we have been talking about certain alternative methods that could exist and ways that we could modify the agreements we have in place where there's a possibility that the service we provide could be substantially similar to what we have now. We just need to take a look at that, of course, when we know more about the final regulations that end up coming out and whether this exception will potentially include foreign organizations within it. We'll just have to see. But again, not doom and gloom here. We're watching it closely, and it is a point of interest for some of our cross-border activity, but not of an incredibly major concern for any Friends Funds that might be on the call at the moment. So don't worry right now. We will figure it out, and we'll see what happens in the regulations moving forward. I think the final thing that I really just wanted to highlight was that we have more clarity now on what donor advised fund assets can be used for. And actually Maury spoke to this quite specifically in her remarks as well. But this is something that, of course, applies in a global context as well. So those limitations on distributions and, the possibility for excise taxes on certain distributions does come in on an international scale as well. And with some of our programs, this will have to be something that we look at closely to make sure that some of the distributions that we do make wouldn't fall into any of these new categories of what can and cannot be, what is and isn't considered a taxable distribution from a donor advised fund. So that's just something to consider. And there were a lot of questions that came in from the audience in the registration process around some of these topics specifically. But I think at this point, what I'd like to do is turn it back to Ted and to the team, because I think we're going to raise some of those questions and open it to the audience for questions.
Terrific. We sure are, Jessie. So as you heard today in our webinar, the new November 2023 proposed IRS guidance on donor advised funds clarifies the definition, exceptions, and excise taxes for donor advised funds and their sponsoring organizations. This guidance also addresses issues of incidental benefits, pledge payments, and public support tests for donor advised fund grants, with some specific areas of interest, as Jessie pointed out today, for worldwide cross-border grant making. The first question specifically for Maury. So Maury, do you get the sense that through these regulations, the IRS is trying to grow the amount of grants given from donor advised funds? Then the person goes on to say, or is this just their attempt to structure an uncertain field in the best way that they know how? We know that there is a lot of pressure on DAFs to distribute more grants. It would be interesting to hear your thoughts on what you think the intent is?
Sure. It's an interesting question. I think it is the second option more than the first, right? Because there's nothing in the proposed regulations, again, issued in mid-November, that requires distributions from donor advised funds. What we get with these proposed regulations are proposed definitions of terms that we've had in the statutes that were added to the code in 2006. So I think what we're seeing is an effort by IRS and Treasury to provide scaffolding, essentially, for how they will structure additional guidance going forward that provides more detail about how they want to see donor advised funds operated. My understanding is that that Treasury and the IRS don't really feel that they have the authority necessarily to issue guidance that would require distributions from donor advised funds, that provisions that would require some kind of mandatory minimum payout for a donor advised fund, similar to what we have for private foundations, would need to be handled statutorily. And so you've seen some provisions like that, like the 2001, 2002, depending on whether you're talking about the House or the Senate, version of the Accelerating Charitable Efforts Act, or the ACE Act, which did, propose legislation that would dramatically restructure donor advised funds to essentially force amounts out of the funds over a much more limited period of time than what we see right now. So for the present, what you see is still that the majority of DAF sponsoring organizations have some form of dormant account policy that requires that amounts be either contributed to or distributed from a donor advised fund on some fairly regular basis.
Thank you, Maury. Jessie, the next question goes to you. How do the new regs or proposed regs affect our ability to donate overseas via CAF America? Will CAF America now have to tighten regulations on recipients in order to comply? And then the final part of the question is, and how do we ensure our end recipient can receive funds through CAF America?
Yeah, I think that in some cases, our overarching capabilities will change in terms of specific things we can fund from a DAF potentially. And I spoke to the scholarship example earlier, but fortunately there aren't like a lot of different caveats that came from this. There are a few specific considerations based on the activity or the charitable activity that we undertake internationally, but not an incredible number. So, it will, and from an overall standpoint, the regulation does confirm that we can use ED and ER from a donor advised fund to make grants to foreign charities. So it actually solidifies some of what we were doing internationally. And then, I think when the final regulations do come out, we'll take a look and see if some of these limitations on what can be funded from a DAF are still in place. And then we might need to amend grant agreements and perhaps work more closely with our donor and charity partners to make sure that they're not funding any and educate generally to make sure they're not trying to fund anything that we can no longer fund, like scholarships. So we'll work closely with our donors and charities to educate on that point if something happens. And then in our due diligence process, we'll have to pay more close attention to some of the things that we're funding that could have changed within the regulations.
Thank you, Jessie. Maury, back over to you. The question is, are tax regulations for DAFs in discussion now in these proposed changes, perhaps meaning excise taxes?
Well, the excise taxes are established in the 3 statutes that we already have under the Pension Protection Act, 4958, 4966, and 4967, that impose these penalty excise taxes for distributions and impermissible benefits from donor advised funds. Also, under 4958, the payment of excessive compensation in some circumstances. So what we get with these proposed regulations are an initial effort by IRS and Treasury to clarify the definitions of terms that are used in those statutes, but no new taxes. It's just an effort to kind of begin to flesh out the meaning of the terms that are used in the statutes.
Maury, I think stay with you for just a second, because the next question is, what do you think the likelihood is of these proposed regulations being adopted? And I was wondering if you could share with the audience a role that you're playing with the American Bar Association.
Sure. Well, the American Bar Association tax section, like many organizations, will be submitting comments. The American Bar Association tax section, has many folks who represent both donors and charities in the nonprofit sector. The plan is to submit comments. I'm helping with those American Bar Association comments, but there are lots and lots of organizations that are rather quickly, because we've got a January 16th deadline, working to put together comments that would provide really, really critical feedback to the IRS and Treasury about the impact of the proposed regulations. And for any organizations out there that are, interested in trying to figure out whether to comment, I strongly recommend that you think about commenting. The more feedback, even if it's relatively informal, that you can provide to the Treasury and the IRS, will be very helpful for them in understanding the impact.
Jessie, what happens if a fund that's not currently managed as a donor advised fund under these this proposed regulations, this guidance, is then determined to actually be a donor advised fund with one of the new tests?
Yeah, so I think my answer to that changes a little bit depending on which fund we're talking about. And as I've been reading through these regulations, I've been sort of going through my mind on the funds that CAF America has that are currently not operating as DAFs, and what those implications would be on each of those case-by-case bases. And I think for the Friends Fund, if it ends up being that the Friends funds are considered to be donor advised funds, which again, we do think there are ways of managing that and perhaps editing our agreements with Friends funds to make that not be the case, even within the proposed regulations. But of course, that's still something for us to explore. But if the Friends funds were considered a donor advised fund, one of the biggest things that this would impact is our ability to work with those charities that are the single organization that's signed on to that fund with certain fundraising activities. So for example, right now, our Friends funds are able to undertake charitable auctions and, run sort of certain dinners and gala fundraising events and things like that. And, the distinction and the challenge would be that under a donor advised fund, donors cannot receive benefits in return for their donations, while under other giving vehicles, it is possible for donors to receive a benefit so long as we provide partial tax receipts that take into consideration the fair market value of the benefit that they're receiving in return. So for example, in a charity auction, we are collecting the fair market values of each of the items that the donors are purchasing through the auction, and we are providing partial tax receipts. Now, under the donor advised fund construct, that would no longer be possible, because donor advised funds, there's a prohibition on benefits received generally. So that would be one major implication for the Friends Fund that we would need to consider moving forward if those funds were considered to be donor advised. But I think there are others, like, we host different general giving funds for disaster relief, and we have a few other sort of area of interest funds that in actuality, while it's not set up as a donor advised fund with a donor advisor necessarily, we actually basically operate it as if it were a DAF in terms of the ways we manage it, and there are no benefits and things like that. And so I think the implications for some of those funds would be more more minimal than the implications for if a Friends fund were to be put into the DAF category. So there's just a balancing act we would need to do there, depending on the relationship, depending on the fund and the construct and how we're operating that particular fund.
Thank you, Jessie. Maury, will anonymous donations be impacted?
It's an interesting question. I mean, superficially, no, right? There's nothing in the proposed regulations that changes necessarily how anonymous donations are implemented. The problem that you have now and would have if the proposed regulations come into effect is how can you be sure that you are complying with the statutory rules that we already have? So how can you be sure that you are not providing an impermissible benefit to an anonymous donor? And there are already some complicated issues that DAF sponsoring organizations are trying to navigate currently and would continue to have to navigate under the proposed regulations.
The next question over to Jessie, a pretty broad one I think we've addressed, but there may be a nuance here. How will the regulations directly affect foreign-based nonprofit organizations?
Yeah, I think right now it depends. I think the answer to that really depends on how that foreign-based organization is working with us or perhaps another intermediary. The answer depending on that, the answer to that question, the answer might be that it won't change at all. But if that foreign-based organization is funding scholarships, it would change. Or if that foreign-based organization has a restricted Friends Fund type vehicle with us or whatever intermediary they might be working with, that could change. So there's not a broad-based, here's what would happen to all foreign organizations under these regulations. It really depends on what types of things that foreign organization is funding with money from US-based donor advised funds, or what their interaction and relationship is with that US donor advised fund.
Thank you, Jessie. Maury, for limitations on payment of expenses beyond, quote, grant fees, such as purchase of services being subject to an excise tax, would payment of consultants, facilitators, or technical experts, but not grant review, translators, graphic designers, et cetera, for community convenings or grant application programs of a DAF be taxable or considered charitable activities?
Well, this is an oddly specific question.
Very specific, yes. So I thought it was perfect for you, Maury.
Well, I think to the extent that we can shoehorn these into the concept of reasonable grant-related expenses or fees, we'd probably be okay. And the question is, which of these consultants can we do that with? And I don't know that we've got perfectly clear answers right now. Perhaps a lot of these things. I mean, certainly, some forms of technical expert beyond grant review might well be appropriate for assistance with different types of grants. There are some DAFs that are involved in some extraordinarily complex forms of grant making that might well need some technical expertise. So it's a little hard to pick apart all of these and provide a specific answer, but I think people are going to would need to be quite careful if the definition of distribution comes into effect as in the proposed regulations, to think about whether the payments that they're making really are reasonable and are pretty clearly grant related, because there will be some complexity there.
So something a little bit more remote really could be no longer able to be paid under those grant fees.
That's right. It could be a taxable distribution.
Jessie, thank you, Maury. Are there specific criteria that will be shifting to meet the IRS regulations for awards to Canadian nonprofit organizations? Are there resources to share with nonprofit organizations to better prepare them for what comes next? Any red flags that charities should be aware of that are new?
Yeah, I think my response there is sort of similar to the previous question about the broad-based impacts on all foreign organizations. There's nothing specific to Canada in the regulations or in our interpretation of what could happen based on these proposed regulations. But, you know, I think, as I mentioned, scholarships does seem to be one of the bigger call outs in terms of if you are, as a Canadian organization or otherwise, funding scholarships with DAF money. That's something that we might need to consider moving forward. But outside of that, we're just, you know, sort of waiting and seeing. And because there's not like any major overarching concern, we're not sort of issuing a warning or things to prepare to charities right now, because it's just not, fortunately, it's not reaching that level of crisis in the regulations. And in fact, the regular proposal boosts and bolsters what we've already been doing internationally in many ways.
So no red flags, and in fact, maybe a few green flags to move forward. Maury, back to the partially specific kinds of questions. How would it impact corporate foundations who use community foundations to process grant payments?
Sure. I mean, theoretically, again, there might be no impact. I don't know the exact facts of this particular scenario. Obviously, most corporate foundations are formed as private foundations rather than as public charities. So it is entirely possible under these proposed regulations that what you would wind up with if you have a corporate private foundation making payments or advising on a fund or account that's held by a community foundation with respect to grants. Under the proposed regulations, a private foundation can be a donor or donor advisor on that fund. So you could have a DAF, perhaps in a circumstance where you didn't think of yourself as having a DAF previously. Beyond that, I'm not sure, other than the stuff that, you know, sort of Jessie has really highlighted in terms of potential changes to how grants are administered. I don't think that there are necessarily specific problems that would arise in the scenario that is posited in this question. One point I wanted to note that I think is important on the last question that we got about the parameters of appropriate fees out of a donor advised fund. The preamble notes that as a general matter, fees or expenses that are charged ratably to all donor advised funds that are held by the DAF sponsor are usually presumed to be reasonable and appropriate expenditures from the DAF. The proposed regulations express more skepticism about expenses that are pulled out of a particular DAF to pay for particular expenses of that DAF, and explain that there's a sort of a facts and circumstances argument that facts and circumstances test that would be used to evaluate whether those expenses were appropriate.
Right. So more across the board fees are likely to be appropriate, but as you get specific, you're going to make sure you've got some good documentation to why.
Yes, exactly.
Going back, this next question is fairly feels a bit complex, so I'm going to offer it to both of you. Can you talk more about the specific restrictions on distributions to individuals and any downstream impacts of that? Then goes on to say, what specific types of questions could CAF America ask of a recipient organization during the due diligence process because of those possible distributions? But then goes on sort of on a very different track. So I'll let you blend these things together as you will. How do you see this impacting disaster relief giving? So sort of a couple different thoughts there. Ladies?
Yeah, so I could start there, and Maury, please feel free to chime in. I think I will combine those two answers, because one of the things when you were reading that first question that came to mind for me in terms of giving to individuals that we haven't really touched on, like outside of scholarships, which we've covered, is, you know, there are certainly programs where we give to organizations and they provide short-term cash grants to individuals in cases of disasters or crises. You know, and we're talking about small grants, so $50, $100 for food and some immediate needs, you know, and in some cases larger too. But I think that is a very important consideration in terms of what could be impacted, because of course we could not give those small cash grants directly to individuals from a DAF, right? And so if we're having to establish that no one is along the line of that DAF grant is giving to individuals, that could be something that's in jeopardy from a disaster and crisis standpoint. Even though there is an exception to certain specific types of disaster funds, which Maury touched on earlier in her presentation. I think that's not really what we're talking about here. That exception, what we're talking about here is, the DAF grants that could ultimately be going directly to individuals. So yes, that is a concern in terms of different types of cash assistance that we might be giving to individuals.
And the person who asked this question, Maury, as you jump in here, then went on to clarify, which I think Jessie did a part of that. By distributions to individuals, I mean distributions to organizations that then distribute to individuals.
Sure. I mean, again, this is a rule that we had from the statute, right? A DAF is not permitted to make a distribution to an individual. The gloss that the proposed regulations have put on it is this sort of anti-abuse provision that indicates that you can't make a grant to one or more intermediary organizations that would then distribute the funds to an individual. And the question is, well, how much control does the original DAF donor advisor have to have perhaps over the selection of that individual in order for it to be a problem? Because obviously many grants out of intermediary organizations are entirely legitimately going to go to assist individuals. That would be nonsensical to think that no individual would ever be touched by the grants that were started from a donor advised fund. I think this is an area where there's certainly a lot of concern. For example, I think certain missionary organizations are concerned about the possibility that they might, what does it mean for grants from a DAF to a missionary organization that then distributes those funds to missionaries? So I think this is an area where you are likely to see some comments and some requests for additional clarification as to how these rules might be implemented, because it isn't particularly clear under the proposed regulations.
Great, thank you. We have a couple of questions that just specifically talk about equivalency determination process for donor advised funds and how that process itself is impacted by this guidance. Jessie?
Sorry, can you repeat that? How the donor advised fund process is generally?
How the equivalency determination process is impacted by this guidance.
Yeah, so right now it's not, and then actually the proposed regulations, sort of underscores that we can utilize equivalency to give from a donor advised fund. So that's a really good thing. But it doesn't directly impact in any way our ability or change our abilities outside of underlining that we can use it.
I think the last question that we'll take today goes to Maury. It's a bit theoretical. So if these regulations were for some reason coming into effect, say January 1st, 2024, what would the retroactive process look like for fund managers and for organizations like CAF America as a whole when final regulations would actually come into effect?
Well, it's a good question. I think we're really hoping that that we would get transition rules, right? Because it seems just unfair to subject. I understand that when the questioner asks about January 1, the implication is that perhaps it's taking effect at the beginning of a tax year. And that would be true for calendar year organizations, but many nonprofit organizations are on a fiscal year and not on a calendar year. So I think that the impact on organizations would be quite problematic if they're trying to implement these things retroactively. What does it mean, for example, for donors who gave earlier in the prior year and didn't receive the particular type of donor receipt that is required to be issued for contributions to a donor advised fund? Do they lose their charitable contribution deduction because the rules weren't in effect at the time they made their contribution, but are in effect retroactively? That seems like a preposterous outcome. So I think that what we are assuming is that there would need to be some type of transition rule that would assist both DAF managers and donors in understanding how these rules would come into effect. And I think we're still sorting out what that means. Again, I think it's an issue that you'll see a lot of comments on as they begin to roll into Treasury and the IRS.
But if we would take from your answer, going back to the question here, it's not a foregone conclusion that that would necessarily be part of regulations. It would have to be thought of by the IRS and specifically added, but there's no sort of automatic provision that would be assuming retroactive or looking back.
Well, the way these are written, they do apply to taxable years ending after the date on which the regulations are finalized. So you could definitely, as drafted, they could have retroactive effect.
Could have, and that's where that question comes from. Well, thank you, Maury. Thank you, Jessie, and thank you most importantly to all of our participants today and the terrific questions that you asked. We hope that we've been helpful on the November 2023 proposed IRS guidance on donor advised funds. Thank you for joining CAF America today.